Welcome back to Big Picture Investing. I'm Kevin McCormick, and we're going to jump into Amazon's upcoming earnings announcement on Thursday, October 30th. There was also an important rumor that came out today that they're going to be laying off up to 30,000 people from their corporate offices. So I think Amazon's going to be important this week because it's part of the hyperscaler announcement. We have a lot of the Mag 7 reporting this week. But Amazon had some capacity that I think other people have overlooked that is coming online last month and this month, which should lead to growth in AWS. So let's jump into the research notes and end by taking a look at the chart. We're going to start off by taking a look at some great research that was released by Semi-Analysis at the beginning of September. But first, every hyperscaler this week should be announcing that they are capacity constrained, and that is what is preventing the growth of their clouds. And you can see it's very clear here. AWS used to be the king of the cloud, but they stopped as aggressively building out their data centers, and then their growth slowed down. Microsoft picked up, and now Microsoft has really been leading the way on the additional growth, with Google quickly catching up. But part of the reason why Amazon has not been growing as fast, and the street would love to hear the news that they're growing at more than 20% a quarter, which I think we're going to return to, was because of they just simply didn't have the data center and the capabilities to do it. But that all changed in the last couple months. As you can see here, the forecast for the upcoming quarter, I've heard everything from 17 to 19% for AWS growth. But I think what people are overlooking is they have two major data centers that have come online for Anthropic specifically, and the custom chips that they have made with AWS. So we should hear good news about the future growth of AWS and hopefully have a little of that even fall into the current earnings announcement. If we do not see an aggressive upside forecast for AWS Cloud, that is not a good sign for the rollout of these new data centers. Now, these new data centers are running on the Tranium 2 chip that Marvell works on with them. And this is the piece that I think is going to be very telling this week and is going to be very important for Marvell investors. You can go back and look about my video about selling all of my Marvell. I got very frustrated after the last quarter because their executives refused to provide future guidance out more than a quarter. And I believe this is part of the reason. It's kind of a show me situation for the Tranium chips right now. And if you listen to what Jensen Huang said, he said you have to give these things away for free to make it worthwhile instead of buying NVIDIA chips. But this is the piece that's important here is on the inference side, the Tranium chips are not using as much high bandwidth memory, and that's where the cost savings is suggested to come into play. But we don't know that for sure. And these new data centers coming on, Anthropic is going to have instant feedback on the real cost of operating these new Tranium chips compared to maybe a Google TPU. And more on that in a minute. But this is also the piece that you need to keep in mind is the Tranium chip had a heavy build out for this deployment of AWS's data centers that should push AWS to over 20% growth a quarter, which then should also lead to a spike after the upcoming earnings. This is what's going to be very important. Along with those layoffs will reduce costs for Amazon. So if we can get AWS growth and a reduction in cost, we should see explosive reaction from Amazon. But if we do not get that AWS lift, then that means this Tranium 2 rollout did not go well, and Anthropic is not happy with the production of those chips. This is also why it's been very frustrating if you are still a Marvell shareholder that Marvell has not provided better guidance regarding the build out of these chips. Jensen Huang and NVIDIA are sitting on POs that for products that aren't going to be delivered for 12 to 18 months. But all Marvell talks about is design wins. But it sounds like most of them aren't backed up with actual POs. And on that note, This is what I'm a little concerned about when it comes to people who are Marvell shareholders. Anthropic just last week announced that they're expanding their use of Google Cloud and their TPUs. And it really highlighted in here that they think it's one of the best run cost perspectives out there. And so right here, price performance and efficiency. That would mean to me that maybe the Tranium chips are not as cost effective as they are expecting. And then Anthropic has now moved more investment into the Google Cloud and their TPUs. But both things can be true, and it's just that Anthropic needs as much data center space as they can get, so they will take TPUs, they will take the Tranium too. These are the things that we should be listening for on the upcoming AWS earnings call on October 30th. Is a readout, one for the AWS business, but then that second derivative effect about Marvell and the performance of their custom chips. If we take a quick look at the chart, you can see here that when this research came out, Amazon was looking pretty good at the beginning of September, but we've had this decline since then. And now today, you can see that we've started to move up. And I really think that after earnings, that we're going to break out to new highs, take out these highs back here, and we'll have resistance around 250. That's my goal for Amazon. I think it could be an interesting trade out there for folks to go long Amazon, short Marvell, because I think the biggest loser in the Amazon earnings call could be Marvell. Good luck with your trading this week. As I mentioned before, lots of very important earnings, and I'll see you next time.